I think there's two aspects for Germany. I think there's one, ideally there's the economic aspects of Germany. It's rental markets. It ticks all boxes. You can develop, you can finance, it leases relatively well, and it has a very liquid market. So you've got depth and liquidity, you've got solid assets, you've got unfortunately now a relatively comparative high pricing that may take a little bit of the energy out, but then again you've got all this new capital coming in as well to fill that gap. So we're happy to step back a little and watch to see what will happen. But you have the economic driver. I think that's a very sound story. But you also have a Europe that isn't leaving you much of an alternative either. So where else are you going to go in Europe? France isn't looking very dandy at the moment. I think there's a bit of a question mark moving forward where Paris is going to go and where the regions are going to go. Amsterdam, you have to have a long-term view. Personally, we like it. Brussels is very stable. Italy, Spain. Obviously, we're seeing a massive interest in Spain. Something that will remain interest, I think. It's not going to converge into a huge amount of deals. I just don't see them happening. And you've got Eastern Europe with all its issues and the Nordics being outpriced. So, Germany is a diverse, a big economy to invest into. And especially if you have international money coming in, it is the biggest economy there. It's a euro hedge, so you're going to go into currency as well. You're going to go with the strongest economy. So I think the interest will remain over the next period of the next 2-3 years, all dependent upon interest rates shifts and the Bund to put pressure on the pricing again somewhere down the line.